on to our third startup. We'll just go to the end of this slide deck. The third startup, Stellar Fusion, is Anik. Anik, the CEO. Please join me on stage, Anik. Yes, thank you.
Good evening, everyone. I'm Anik Haque, the founder of Stellar Fusion, and today I'm excited to introduce you to a disruptive platform revolutionizing equity research. I spent over 20 years as an equity analyst at top firms like Morgan Stanley and Citi. During my journey, I became the #1 ranked advisor for the mining sector and later led a successful small mid-cap team. It was during this latter part of my career that I realized the limitations of traditional equity research. To address these limitations, I've assembled a team that is exceptional, and allow me to introduce them quickly. Charlie Mortimer, our co-founder and CFO, here with us today, worked closely with me at Citi and understands the problem and solution deeply. Our co-founder and CPO, Chris Nunez, also here today, has been instrumental in shaping our platform and understands how to build amazing financial products. Alongside them, we have JP and his exceptional tech team, plus a talented data science and modeling hub in Bangalore. And we've also built an outstanding advisory board. One notable member that I would highlight here is Andrea Ciccolini, co-founder and former CTO of ION, who plays a crucial role in our AI and automation vision. Now let's talk about our vision. So our goal at Stellar Fusion is to bridge the information gap between investors and corporates using financial models. We envision a world where companies can communicate their financial story directly to investors, enabling more informed investment decisions. So what's the problem here? It's a problem that we've seen for a long, long time. Traditional equity research is broken. Budget cuts over the last 10 years post-MiFID have meant declining advisory revenues, inadequate coverage of research, and companies today lack transparency, and investors struggle with subpar research. But today, the digital era demands a modernized approach. Regulatory requirements and the need for transparency are an all-time high. Advancements in AI and data science provide the tools to transform equity research. And that's basically where Stellar Fusion comes in. We've developed a comprehensive solution that centralizes financial models. For corporates, our platform hosts the financial models of their companies, increasing transparency and communication. Simultaneously, we provide investors with access to these models, enabling them to carry out forecasting and valuation analysis more efficiently. All of that is powered by a network that effectively allows us to monetize both sides of the platform through a B2B SaaS business model and creates network effects and data-driven insights. But we don't stop there. With the help of Andrea, we've basically been accelerating our AI-driven smart forecasting solutions. In the next few weeks, you'll see smart forecasting now live on our platform. We're extracting significant amounts of fundamental company data from documents at scale, and that allows us to grow the number of companies on our platform rapidly. And additionally, we're gathering user consensus data to overlay with company data, building context-specific data sets. What's our traction been like? So since raising our pre-seed round in May last year, we've made significant progress. Our beta platform went live earlier this year with more than 100 company models to help us learn the exact product market fit. We already have 5 early adopters, including eDreams, whose model went live 2 weeks ago. And the eDreams example demonstrated clear network effects where 12 new professional investors signed up as soon as the model was up and running. We have 12 corporate models now in development, a pipeline of more than 50 additional small mid-cap companies that need our product. And furthermore, we're in discussion with significant strategic partners, including one of the largest investor relations firms in the US, a large UK small mid-cap broker, and some of the largest stock exchanges in the world to deliver our solution to them. I won't go into each of these comments in terms of what our customers think, but what's clear is that our customers love what we're building. Corporates see Stellar Fusion as a way to communicate their investor proposition clearly, bringing their financial story to life and access a broader investor base. And investors view us as a way to lower the bar to get investor ready on new stocks and save time building and updating models. The market opportunity is substantial. So we think there's more than 40,000 public listed companies out there, Private companies become an opportunity for us in the future, as well as broking and research platforms and more than 1 million professional investors. Based on our bottom-up pricing approach, we think that leads to a market opportunity that exceeds more than $4 billion per year. When it comes to competition, look, our approach is totally unique and sets us apart. stellarfusion's centralized platform, emphasis on financial models, and AI-driven forecasting solutions leads to a comprehensive, disruptive, and scalable solution. There are existing players in equity research and financial data space like Bloomberg, S&P, AlphaSense, Delupa, Visible Alpha. We are replacing the very much loved Excel solution that most analysts, investors, and corporates are having to use today. In terms of our financial summary and forecast, I would like you to just take away 3 things from this slide. One is that in the past couple of months, we have bedded down the feature set our customers want, and we are now in a position to double down on sales with a de-risked pipeline. 2, our business model allows us to monetize both sets of customers, the investor and the corporate. I think of it very much as a delivery model. And the network effects mean we can build a significant business without the need for too much capital. What are we doing today? So we're raising 1 million with a significant portion of that already secured from industry-leading angels. You'll see some of the big houses there that they've been leading the round. There's potential for us to increase the size of that round, and this funding will accelerate our data and automation efforts and allow us to basically double down on the small mid-cap segment that we're actually starting to generate sales from, just this first signs of sales from just now. So in conclusion, stellarfusion is reshaping equity research by bridging the gap between companies and investors. We're providing transparency and leading-edge, cutting-edge technology for investment research. Chris, Charlie, and I would be delighted to answer any of your questions, and I'll invite Chris and Charlie up to sit with me on the panel. Thank you.
Fantastic, Anik. So let's open up for questions. Who wants to ask the first one? Yes, we've got Mario.
Thanks. Thanks for the presentation. Very exciting. So can you tell us a bit more about how you make money and how you would charge? You said both sides, but if you can give us a bit more. And the second question, if I may, is a bit of the secret sauce behind the product. Where do you extract the data, and how do you then deliver to the customer?
Yeah, so I can just touch on the pricing model. So look, we can charge the corporates to build their model, basically, and eDreams and some of the ones that we're actually speaking to are an example of that. We think we can price that product at an average contract value starting at around $20,000 ACV for the year. But actually, the way we want to distribute it is through partnerships with investor relations companies, through equity research houses, even exchanges in the future. And then on the investor side, we think we can charge the product basically to professionals, investment banks, etc., at around about $500 per seat per month. And that's kind of how we're working through it. But the real network effects is the eDreams example that I mentioned, where eDreams sending out their model and sharing it with investors leads to more investors joining the platform. That's really where it starts to kick off and get powerful. And the exact same thing works on the investor side. So if an investor says, here's a company that I would like a model of, us starting off building that model and engaging in the conversation with the corporate, again, powers that quite quickly. And then Charlie can perhaps, do you want to touch maybe a little bit on the modeling? What's the secret sauce?
Yeah, this one? This one's on. Yeah, so we've got a team of 6 in Bangalore who build the models. We have a team, JP, who was on the slide earlier, our data science guy, who will download a lot of the data. But we build each company individually because that's very important. We're not just a data aggregator like some of the others. So we'll bring all the data into one sheet and then build a financial picture of that company on an individual basis. And then with the companies that we're working with, we'll structure it in the way that they view their company, which is also important to the investors because that gives some sort of degree of validation as well. But yeah, we have a technology to be able to get the data very quickly. And then we have a whole team who put it together in the way that we want and the company wants to be able to then deliver to investors in a very usable format.
Hi, so for my sins, I was also an equity analyst for over 20 years. Very happy I'm not anymore. In an industry which has seen, as you said, margins squeezed massively. So there's two questions. How's that going to work there's less and less research commission around, so you're in a fundamentally shrinking market. So how are you dealing with that? First question. Second question is, one thing I learned about models, and that they can be as beautiful as you want, but it's bullshit in, bullshit out. And in fact, the more beautiful they are, it can sometimes hide the bullshit that's gone in. So how dynamic can you make your models so that the user, the investors, can actually see what assumptions have gone in, and to what extent can they vary the assumptions?
Can I just get that the ticker there actually? So on the first point, so I would say you're absolutely right, but the cuts in terms of number of stocks getting coverage has meant that you're seeing growth in sponsored research. That's been growing rapidly over the last few years. So there's almost, I was told last week, there are 170 sponsored research houses that have actually grown in the US just the last few years. Secondly, in terms of budget proposition, look, I view us very much as a cost-saving, time-saving opportunity for both professional investors and analysts. So one of the houses is a UK broker that we're talking to, and their view is that, look, we're covering 130 stocks, we've got 30 analysts, we need the same 30 to cover 400. And stellarfusion, actually just using stellarfusion to put your forecasts in there means that you can focus on the qualitative side of your work. There's another broker that we're talking to in the US, which has got 7 analysts now covering 140 stocks. So we're really about providing bandwidth for that analyst group. And so, I think the cost saving element, actually, we lean into that rather than actually being a constraint in any kind of way. And the second point, Charlie, you might want to touch on this a little bit as well, but in terms of models, you're absolutely right, but most of our corporates would, if you spoke to them, would say to you that most of the analyst models out there are pretty bogus, pretty average. That means that actually a lot of the consensus data that most people are using to actually forecast businesses or value businesses is half the time wrong. So we're bringing transparency to that, if anything else. And look, we put a lot of checks and balances in to provide that transparency on the quality of models that actually most analyst models wouldn't provide.
I think an important point to note here, which maybe we didn't make entirely clear, is that we're not telling you what to buy or sell. So we're not giving forecasts to the users. There are ways of doing smart forecasting using historic data to predict what might happen in the future, but the user has full control over what the forecasts are. So we provide... Consensus forecast. No, so we're using... we can introduce consensus forecasts to the model, but essentially we give you the historics and then we allow you to put your growth rates in, put your margins in, put your working capital assumptions in. All of those assumptions are the user's own assumptions, and the DCFs and the valuations is all the user's own assumptions.
Another question for the team. Yes, please.
Whenever their company reports. So yeah, if it's a US company or a European company, when the company reports on a quarterly basis, then it'll be updated on the day of results, or UK and it's half yearly, it'll be half yearly. Exactly, yeah. So we're working on an automated way, because once you structure the model in your way, then you can map the data correctly. In the US, it's much easier. Then you can bring the data in much more easily. In Europe, it's more difficult. It's still possible. And yeah, unless a company completely resegments, which happens. But yeah, you've done the heavy lifting at the beginning.
Final question, yes, please.
You mentioned that you need to work with the company to do the modeling. What stops you from just doing modeling if you're focusing on publicly listed companies?
You don't need to. We like to. So we like to work with companies because it gives you, there's a degree of validation, but there's no requirement. We're working with some investors in the US who have asked us that these are the 3 or 4 companies that we would like coverage, which we don't have access to, and we build the models. And then we'll reach out to companies and say, do you want to help us with it? We've got investor interest in them, and some of them come back and said absolutely, because they want a good model out there, but there's nothing stopping us building it.
And so to give you a sense, so we've got about 130 on the platform. We built them ourselves because they drive traffic. We're building probably another pipeline of about 100 that we know are the small mid-cap companies investors care most about. So we've screened a lot of analysis from fund data. We're building them anyway. That just allows us to engage that same corporate in a conversation. And then often they want to actually edit that and iterate that. And they actually want to access the data because we're gathering consensus data every time someone basically changes those forecasts.
Brilliant. Well done.
Thank you very much.
So now before we move on to our next startup, I want you all to go back to the questionnaire, which you have seen at the beginning, and download it. Just go back to the scan to the QR code and complete what you thought about our first 3 startups. So let me just go back. Oops. Here we are. So that's the QR code. Please scan the QR code if you've not done it yet. And now you can respond. Startup number 1 was Renewal, Gonzalo. Startup number 2 was Azure, Philip. And startup number 3 was stellarfusion, Anik. And just, you can now respond how you want to be engaged with these first 3 startups. Then give you some time to scan it. It should all work. Hopefully we tested the QR code. And you've got 4 options for each startup. Either you want to meet the CEO, you want to get more information, you want to be included in investor meetings. Just tick the box for Renewal, Azure, and stellarfusion. So now I will go to our next presentation, so move forward now. So we're almost there. So now we're moving to our 4th startup, which is Zen Pulsar. Then we're looking forward to welcome Zen Pulsar Alex, CEO, to me on stage. Alex, welcome, and your stage is yours.
Thank you very much. Hello, everyone. My name is Alexander. I'm CEO and co-founder of Zen Pulsar, and today I'm really excited to tell you about how we use artificial intelligence to empower investors with reliable and accurate social media data. So, social media became a very powerful force which affects the capital markets significantly, and this happens because more than 60% of adults use social media as the major source of information and news today for taking business decisions, investment decisions. And speaking about retail investors, so more than 80% of them actually getting all the analytics and investment insights from social media influencers. And additionally to that, social media is a significantly noisy space full of manipulators who use different narratives and play games like pump and dump and other coordinated activities that makes investors have to be very attentive to the real sentiment, to accurate sentiment from social media, and understand in detail what is happening there. And this effect could be really dramatic. So just reminds Silicon Valley Bank, First Republic Bank, which collapsed within very short period of time because the bank runs were significantly amplified by social media. And the investors today, they miss the reliable source of the information and analytics because the volume of data is significant, it's spread across multiple platforms, it's difficult to access it and analyze because there are 80+ languages, different formats, starting from text, going to audio, video, and others. And the problem is not getting smaller, vice versa, it's getting bigger. Because we all see the rise of generative AI, and this tool in hands of manipulative actors will give us even more challenges, because it will be more difficult to understand what is authentic in social media and what is not. So here, just a small example happened recently. The fake picture of explosion nearby Pentagon dropped markets for $500 billion. It happened for a short period of time, but still. So, and here where Zen Pulsar comes in. So we have developed a powerful AI platform which is capable to analyze billions of data points on a daily basis from multiple social media platforms in 80+ languages to clean out the noise, to do the financial sector specific analytics of data, narratives, sentiment, structure this data, assess authenticity, and make it available for professional investors from hedge funds, like trading houses, asset managers, regulators. So the heart of our solution is data-centric AI, which is trained using our proprietary data sets, which are constantly updated because social media is very dynamic space, and what is like what's data is accurate like half a year ago on the like bearish market, today on the bullish market doesn't work well. So, and we are very focused on providing the noise cancellation, because the noise is the most significant, one of the most significant problems which companies are dealing with. So more than 60% of time of data analysts are spent for just data cleaning. And we provide 99% of accuracy in our data. And another amazing thing which we have is 98% precision in bot detection. So why bots are so important? So of course, except the fact that they were approximately a deal breaker for Elon Musk to buy Twitter. So the bots are responsible for more than 70% of the noise in social media and eradicating of the bot traffic, understanding when it's who is speaking. Bot, influencer, market analyst, or retail investor gives a lot of edge and alpha generation potential for the data we have. So we are focused on financial sector, and our platform is a go-to solution for financial market players when they want to get nuanced, accurate sentiment data and comprehensive social media analytics. And our customers get access to the data via means which they're most comfortable for them and best fit their workflows. For instance, hedge funds, who use quantitative strategies, directly connect to our data lake using API and benefit from live data feeds which we produce. And traders, asset managers, researchers, they use our SaaS platform, which gives them ability to do the sentiment analysis, to conduct the generation of investment ideas, and which is also very important, spot market moving events from social media, which are there, appear faster than in traditional media, and giving them additional edge. So our SaaS platform provides the visualization of what's happening in social media and how it corresponds and correlates to what's happening on the financial market. And it gives ability to spot which are those posts, events, news, which provide the effect, who are the influencers who are actually pushing this narrative further, and what is the audience reach they have. So, and all of this generates alpha, which was confirmed by independent research by Professor Milan Zdravkovic. So the market is expanding. So the social media analytics market will reach 50 billion, and it's very driven with high rising demand of social media of data in general, and democratization of machine learning operations. So there is no a player who really owns this market as of now. There are many sentiment providers, but they are a bit old school. And we have the competitive edge, which how we're actually disrupting this market, because we are focused on noise cancellation and cleaning out the data using our proprietary data sets, which we got from our previous experience in cybersecurity. And cybersecurity is a front line of technologies which are fighting constantly with good and bad, and we use all this technology here. So plus we are data compliant from the day one. We have internal expertise in data compliance and had third-party analysis of all our data operations. Plus, we have like the biggest coverage of social media platforms. So our competitors just have two, Twitter and Reddit. We go far, far beyond, and our like coverage significantly goes to Asia, which is like the #1 market in terms of retail investors and impact which they have on capital markets. So our business is recurring revenue streams generated by subscriptions, and we were launched to the market in the end of Q1 2023, and now actively building traction with customers and partners like Bloomberg, New Data, DataRate, and others. So we have amazing team, experienced entrepreneurs with a lot of success in previous life in tech, development, data analytics, and compliance and cybersecurity. This gives us fantastic opportunity to really win this market. So we are raising 1 million at $10 million valuation, euro valuation, to facilitate the development of our products and use the beneficial situation on the market to grow our traction and sales. Thank you for your attention. Happy to answer the questions.
Thank you very much. Julian, please join us on stage. So who's got the first question for Zen Pulsar, please?
Yeah, hi. So I really like the pitch. My brother has a hedge fund. He always says, when somebody has some data that could make them money, why would they publish it? If you have this superior knowledge, you should trade on it and get rich and tell no one, no?
I think your brother knows that the social media data and each of the data is just a part of big equation, and the goal of us is not develop just pure social media driven strategies, but provide this as a competitive edge to those hedge funds who have already their good pipeline of their analytics and strategy and make them additional alpha on the top.
That's great. Other questions? Yes, please.
Hello. Yeah. Thank you for the pitch. I really want to know a bit more about your secret sauce here. I've seen that market for quite a long time, and I've invested in another company which was not successful, I have to say, not because of these very narrow margins and also the very crowded market. There's a lot of competition. Maybe you explain me a bit, yeah, how you're gonna beat everybody now, because it's a very crowded market with a lot of players, also good ones, niche players and large ones. And you need to make a big difference to win it big, because it's not easy. It's a small margin market, and you need to win a lot of good customers to make it in that. Yeah, and I wish you that, but I need to have the explanation. What's your secret sauce? Why you'd be the chosen ones?
Yeah, it's a very good question. Thank you. So as I mentioned, so our secret sauce lies in the way how we work with the data. So the other competitors, they provide in most pretty basic analysis of sentiment, like bullish, bearish, or neutral. So we go much beyond. First of all, we profile the audience. So because, for instance, the power of the sentiment of professional investor influencer is much bigger than average retail investor or the bot. And where we use our data-centric AI trained specially to get the very, first of all, clean data and deep analyzed for sentiments, detailed taxonomy, fact checking, etc. So our data is saying simpler, is more precise, more accurate than many others. Plus, we cover more social media platforms. So everyone covering Twitter, Reddit. We do much beyond.
Maybe Julian, do you want to add? You as a co-investor, as a leader,
co-founder,
yes, co-founder,
yes.
exactly. What is your vision for the business?
My vision for the business is in line with everything that has been said so far, and I think one point is Asia as a big market for us, and I think one of the other points in terms of a competitive advantage is the fact that we've been working on acquiring a lot of Asian data from social media Asian platforms like Weibo and others, which are more niche. Which also I think is a big differentiator with the competition at the moment.
Great. Another question for yes, please.
So how many languages do you currently support?
Currently, we see like 80 plus languages in our databases, and we have like very good fine-tuned models for English and dialects of in China, like Cantonese and Mandarin, because these are like very big markets for us both.
Perfect. So I think that's so one more question.
Sorry, follow-up question on that. So how do you work around noise cancellation? Do you actually employ actual people to fine-tune the AI model, or is it just pure supervised or non-supervised models?
So we use like complex of measures. So all the noise cancellation is done like automatically. So we use weak supervision models like to update and our like training data sets, weak labeling, and like this helps us like dramatically decrease the involvement of humans in data preparation and data management.
Brilliant. Wonderful. Thank you very much, both of you.
Thank you.